that there will be a bill to pay with the piper. It cannot be evaded. And I think it will surprise people when it's presented. So there's two ways. Either the mainstream is right, the long and variable lags are longer and more variable than expected, and sometime next year, the economy really weakens, or I'm right, something else breaks. And I think probably before the end of this year. The last time you and I spoke, I said to expect pain ahead. I'm going to double down on that, David. I've only got a few months left. This is a rare Lobo Tiggre prediction for you. I think before the end of this year, we will see something else break.
Lobo Tiggre is back. He is the editor of the independentspeculator.com. We can follow his work online and on his Twitter. We'll put the links down below. Lobo here to talk to us about which sectors in the resource space may do well right now. But first, let's talk about what's driving the global economy. Lobo, welcome back.
Happy to be with you, David.
A couple months ago, you were telling us about cracks you may see in the system from the Federal Reserve. Let's look abroad outside the U.S. first. Big news this week is China. Disappointing data from China indicating slower growth. The consumer sector is already reaching deflation. Youth unemployment is so bad now, they stopped publishing those numbers. So, really, I don't know exactly what's going on in the country because I'm not there, but just from the data that we're allowed to see, right? It's not looking great. Does that mean the end of commodities demand?
Well, that is a serious question. We ask somewhat tongue-in-cheek, but when the government comes up with an excuse like, "Oh, we're going to stop publishing this number because we need to re-examine our assumptions," has nothing to do with how high the number is, right? Nobody believes that. And it's a difficulty with China because actually nobody's really outside of China believed those numbers. And I don't know if in China anybody believes those numbers for a long time. That's why independent sources like China Beigebook have done so well. But whatever the numbers are, they're not good. And if the numbers are willing to admit to, or up until recently were willing to admit to, are not good, it's pretty bad. And this country garden issue, and now some of the shadow banking non-payment issues. This is a big deal, David. And I think it would be arrogant of me to say, okay, I'm the China expert. I know what's going to happen. Here's what you do. So I'm not going to go there. I'm going to say, though, don't downplay this. And to connect it to your intro there, I absolutely do not assume that this is just a Chinese problem and that somehow American exceptionalism will protect the U.S. economy. I mean, at the most fundamental level, if the factory of the world is shutting down, what does that tell you about the rest of the world? What does that tell you about the global economy and demand? It's not good, no matter how you slice it, no matter what you say about, oh, well, it might be this, it might be that. This is a very bearish indicator for the global economy. And to answer your question, for the resource speculator out there, it is a reason to be very, very cautious about deploying any more money on industrial commodities at this time.
Let's break this down for people who want to learn a bit more about industrial commodities. Which of these commodities are most in demand by the Chinese?
Well, they're the largest consumer of copper, of lithium. I mean, everything. Not everything, but almost everything. Even the things they export, the rare earths, they're using them as well, and so on. So I think it's one of those rare times. There's a lot of things I don't know, David. I don't know how this China thing is going to play out. And it could actually turn around and be the best thing in the world for economies because they've been very hesitant to really reopen the money floodgates. They know they had a problem with ghost cities being built and all this stuff. They don't want to reinflate a new bubble. And the PBOC has been taking baby steps. People have been talking about the latest rate cut they did as being the biggest one since 2020. I mean, 2020, give me a break. It wasn't like the Fed funds rate where it affects everything. It was a rate in one sector of one kind of debt that they tweaked. This is a relatively minor thing. So China, I think, I'm impressed. I got to give them credit for resisting the urge to just open the money floodgates and throw money at the problem. But if what they do isn't working and they have to do that, you could see a reflationary boom that you could see them say, well, screw it. We'll just throw more money at it. And we could see commodities take off before the end of this year. That could happen depending on what China announces. So I'm not saying go out and sell everything. I was very careful to say I would not deploy more money in industrial commodities at this time. And the answer to your question is all of them: copper, lithium, everything, with the one exception of uranium. because uranium is something you need whether you have a recession or not. They're building those nukes, gangbusters, and the other BRICS are as well. And Europe is pivoting towards nuclear. We can go into uranium if you want later, but the quick one is just uranium is different from every other commodity out there in that it's still right now priced below the cost of production, the average cost of production worldwide. So you add that to inflation irrelevant, and you add that to recession resistant, and that would be the one exception that's happening right now. I mean, uranium prices are up this year, and it's an interesting market to be in.
Yeah, let's drill a bit deeper into uranium, but just a little later in this interview. Just to clarify, when you say they're building these nukes, you mean nuclear reactors. You don't mean
Yes.
you don't mean nuclear bombs. Okay.
Well, we don't know. They might be doing both, and that's an interesting point. The military offtake of uranium, nobody discloses that, but we know it's happening. I mean, the U.S. under Trump started tearing up nuclear arms reduction treaties. And sorry, Trump fans, I mean, that's just a fact, right? And we are in a new nuclear or general arms race with Russia. I don't think it ever stopped really with China. So who knows what the military offtake is? Maybe that didn't matter when the secondary market was oversupplied. But we now know with uranium back close to $60 a pound, that's no longer the case.
Just out of curiosity, we're going to go talk about nuclear energy in more detail later, but roughly how much as a percentage of uranium production worldwide is used for energy versus refining for weapons?
I couldn't tell you. I can tell you that one of the big reasons why uranium got so cheap, went down to $7 a pound 20 years ago plus, was because there was this excess on the military side, and we had this down blending. What do they call it? Atoms to. There was a clever slogan for it, but they were down blending warheads from Russia specifically because they had a huge stockpile, and they were down blending warheads to make fuel for nuclear power plants. And so that basically put the entire mining sector almost entirely out of business. There was all this flood of secondary supply. And then in there, well, I don't know how far you want to go down that rabbit hole, but let's just say that shows us, though, that the offtake in a building phase can be huge. If a deconstruction phase from the military could flood the market with supply, then going in the other direction, it's at the very least quite bullish.
One positive or potential positive from the China story is potentially for the consumer here in the U.S., people are saying that deflation could be imported into America in the sense that if China is experiencing deflation and an overall slowdown in consumer growth and demand, perhaps that will mean slower growth abroad, as we know. China is the world.
I don't buy that. I mean,
you don't buy that? No.
Technically, that's true. I understand the argument. I see what you're saying. And yes, if widgets made in China, Chinese factories are desperate to sell their widgets because they've got to pay their bills, and they drop the prices 50%, and suddenly you can buy widgets in Walmart for 50% off, then that consumer of those widgets is better off. There's no doubt about that. But why is it happening? If it's happening because China's customers are in trouble, well, guess what? Those customers are in trouble. It's kind of like saying, you know what? If you lose your job and you don't have enough money to eat, guess what? You'll save money on food because you won't have enough to pay for it, right? It's circular thinking. It's, I think, a little bit desperate looking for a silver lining here.
So you don't think Walmart is going to drop their prices just because the suppliers in China are going to drop prices?
Walmart can pass some savings along to its consumers, and they're all over that. They'll put them in the back of the store, so you have to go through all the expensive stuff in the front of the store to get to the stuff that's on sale in the back and all that. But what I'm saying is, if China is the factory of the world, and China has to cut its prices because the world is anemic, it's sick, and it can't afford to order so much stuff from China, you can't overlook the fact that what's causing that deflation is bad news. The bad news really is bad news. If your customers can't afford your stuff and you drop prices, that means your customers are in trouble.
Well, people were really hoping that the Fed wouldn't raise any more rates because of this.
Until retail sales came out strong and so on. This leads to, if you want to go to U.S. sentiment and U.S. markets from there.
Yeah, let's do that.
Perfect segue. I think it's quite interesting. Last week, as you and I record this, it was all about team soft landing, running victory laps. It was all about soft landing, how great this is. The Fed has won, inflation's coming down, and the economy hasn't tanked, labor market's still strong, everything's fine. Everybody was celebrating team soft landing's victory. And now this week, people are suddenly realizing, well, wait a minute, soft landing, if there's no recession, if there's no loss of jobs, then the Fed can't cut rates. And so if you're Wall Street and you're betting on the Fed cutting rates even before the end of this year because it's won the war against inflation, and suddenly higher for longer looks like much higher for much longer, you don't care whether they raise another 25 basis points next month or not. You're thinking, oh my gosh, these rate cuts I was counting on, they're not coming. And how does that affect my pricing? So in my free weekly digest, David, I don't know if you have time to read every precious word I write, so I won't assume you have, but I've been making the case. I've actually been making a bear case for gold in the near term. Believe it or not, gold bug that I am. I'm not a permabull. And I've said that if you have a circumstance where team soft landing appears to be right, but mainstream finance catches on to higher for longer, that's very bearish for gold because gold doesn't pay interest, right? So if you've got higher rates, you're competing against, the so-called no-risk asset of bonds that are paying very high coupons or giving you an excellent coupon. But at the same time, soft landing means there's no fear. So you don't need no safe haven assets, right? So where's the market for gold in that environment?
Is gold going to react more to a soft or a hard landing or lower rates? Because it seems like neither is going to happen anytime soon.
Well, react in which direction? No, I get it. So actually what I'm saying is I think it reacts to both, but in different ways. Like the apparent victory, and I keep saying apparent because I don't buy this. I think that the long and variable lags have yet to be felt. And it's very premature. All these people saying, oh, it's been a year, we haven't had any of these long and variable lags, so they're not happening. The average duration is about 18 months. It ranges from 12 to 24 typically. So even just looking at the average, David, it's way premature to say, oh, hasn't happened yet, not happening. But besides that, we also had not just households get a bunch of cash from stimmy checks. We had homeowners refinance at lower rates, so they're benefiting from that. You also had companies lock in low rate debt, so they're relatively insulated from Fed policy. I think this is one reason why people keep scratching their heads. Well, gee, we had this record tightening from nothing to over 5. Why aren't we seeing more pain? Well, if the corporates locked in low rates and did a better job than the United States government on duration on that front, they're actually relatively insulated from that Fed's number one policy tool. So I think the brown stuff is still headed for the fan. It just hasn't hit yet. So I don't buy team soft landing at all. But to answer your question, while team soft landing appears to be victorious, I think that's very bad for gold. I think we could see dramatic moves lower in gold, especially if it breaks below psychologically important variables or technical floors or so on. You could easily see it break under 1900 and go straight down to 1800 or maybe even lower, depending on what gets triggered there. So big moves if team soft landing appears right. On the other hand, if the next regional bank crisis or gilt crisis or whatever the next thing that breaks du jour is, causes the fear to come back, you could see gold take off in the opposite direction. So I'm not sure how helpful I'm being, David. I'm not saying, here's my prediction, gold's taking off, buy. Or not saying, here's my prediction, gold's tanking, sell. I'm saying it could go either way. And if that's not helpful, then at least I hope people will realize it's honest. I don't think anybody really knows right now.
That's fine. I mean, I always tell people it's the rationale that's more important than the actual prediction. So let's talk about the rationale first. So if team soft landing wins, you're saying that could be short-term bad for gold. Why? I mean, if team soft landing wins, the Fed doesn't need to raise rates anymore, right?
But they're already high. If team soft landing wins, you still have, think about it. If team soft landing wins, it means the economy seems fine. Well, why would the Fed cut rates? Everybody's been assuming, everybody on Wall Street or the plurality of investors have been assuming that as soon as the hiking cycle stops, pause a little bit, not long, but then we start cutting because the rates don't need to be that high. But if we really have this soft landing, we didn't get the expected weakening. Remember, the Fed itself was projecting increases in unemployment far larger than we've seen so far. If that doesn't happen, why would they cut? And people are starting, like I'm hearing this in the chatter of the talking heads on financial media this week. Like people are starting to realize, well, wait a minute, this soft landing has a dark lining here. Higher for longer. Suddenly, people are starting to believe that the Fed may really actually do that. So why that's bearish for gold, and I'm not just talking gold here, but on this question, why that's bearish for gold is because high real rates are always negative for gold. That's a very strong relationship. High nominal rates turn out, we've discussed this before, to have a negative impact on gold prices. And what supports it is the fear factor. If you have that safe haven demand, then that's good. But if you have a soft landing, there's no safe haven demand. People aren't worried. The people who were saying a month or two ago or after the regional bank crisis, those people were saying, maybe I'll just buy a little bit of gold as a hedge here. I'm scared. Banks are going up, belly up. This is scary. I'm going to buy a little bit of that. Goes out the window, David. That whole source of demand goes out the window. Now, maybe central bank buying by BRICS countries saves us, but maybe not. That's not a trend that anybody can bet on, I think.
Well, that's actually my next question. Do you have any expectations for the BRICS meeting next week? A lot of things on their agenda, their meeting, high-level meeting. One of the things that is speculated that they might talk about is a BRICS common currency. I think that is a part that's most pertinent to our discussion right now. Is that something you're looking at?
Well, I have to. I mean, there's so much hype on this, and people. I got a question from somebody on Twitter the other day. What is my gold price forecast when the BRICS announce their gold-backed currency on August 22nd or whatever the day is? It's like there's so many assumptions. In the question, right?
Yeah.
They assume that's going to happen. They assume it's going to happen on August 20. Like A, B, C, D, E, F assumptions to go even into that question. I don't think any of them are sound. We've already had the Indians say that they're not interested in a BRICS currency. We've had the South African hosts of the conference say that a BRICS currency is not on the agenda. It's not even on the agenda. We've had the Russians say, oh, yes, we're going to vote for, we're going to adopt a gold-backed BRICS currency.
How did the story even start circulating?
Well, let me come back to that. The Russians have an interest in destabilizing things. So, of course, the Russians are going to say the most incendiary things they can to disrupt their opponents. So basically, I discount that. To answer your question, my expectations for this meeting, a lot of hot air, very little action. If there is anything major or big news, it will probably be about expanding the BRICS coalition, about letting other countries, they say they have dozens of countries have asked for inclusion in the BRICS groups. Now, bear in mind, this isn't actually a formal treaty organization like NATO. It's not a United Nations. It's just a club, right? So, that would be the most I would expect in terms of fireworks out of this would be admission of new countries. I suspect that we won't hear anything about a BRICS currency at all. There will be zip, zero, zilch. It will do nothing for gold one way or the other. It might even be bearish to the degree that people are expecting a BRICS gold-backed currency and then don't get it. But to your other question, though, and I think it's important to bear in mind that I have heard talk about this BRICS gold-backed currency or a BRICS currency for at least 10 years, maybe 15. I remember it back in my Casey days. Back 15 years ago, it wasn't like the BRICS were talking about it. It was Doug sitting there thinking, I could imagine someday where countries like Brazil, Russia, India, China would want to get away from the dollar. And they might adopt something else, and they don't trust each other, so they back it with gold. I remember Doug saying stuff like that. And then like 5-10 years ago, China started making moves to de-dollarize. And then since the war, the last couple of years, there's been a lot more noise about this. So maybe it's something that happens. I guess to the people who really believe in this, let me say that I'm not saying, no, it'll never happen. I'm saying that it's a story that's been out there for a very long time. It's dangerous to assume that it will happen this year. It's dangerous to make specific stock investments or speculations thinking that something will happen this year or this month. That's the main message here, David.
It's not so much just whether or not you and I or anybody else on Twitter believes it. It's whether or not the market believes it. And so far, the price hasn't moved. So that's telling of something.
Actually, that's a good point. I think when you say the market, who's the market? It's not you or me going down to the local coin shop to buy some beautiful gold buffaloes, right? That's COMEX traders, LME traders. They're not buying this BRICS gold-backed currency. You can see that there is no correspondence to the futures trades and BRICS gold currency news at all. So those so-called professional traders, this isn't on their radar at all. It's just noise.
Okay, so let's talk about what you think may drive up the gold price. You said earlier, no soft landing. When? All right, okay, that's a bad question.
No, let me answer
Nobody
your
knows
question.
when.
We said soft landing would be bad. I said recession would be good.
Yes. So yeah, triggers for recession. Let's start with that.
So I need to take a step back and separate the mainstream view, and to the degree that there are any bears left on Wall Street, wounded and hiding in their caves, they keep pushing back their dates or expectation dates of, oh yes, long and variable lags, we eventually have to pay the piper, but now it's going to be in 2024. Well, now it's going to be mid 2024. Well, now it's going to be late 2024. I think those people are using conventional models, and maybe they're right if nothing breaks. My thesis, can't prove this, is just what I think, is that what the Fed has done has been so extraordinary that it will break more things. The regional bank crisis was just an overture. I will be truly, truly shocked if that's it, if nothing else breaks. I suspect this is already happening. I mean, candidates people talk about, the commercial real estate, student debt, all kinds of potential candidates out there. I have a feeling that when it happens, in retrospect, we'll say, gee, we should have seen that coming. But it's probably not going to be any of the candidates anybody's talking about now. It just seems that always something breaks, and it wasn't what we expected. So I won't pretend to know which is the thing that's going to break. My thesis is just that it is very reasonable to think that something else will break. I cannot conceive that you can take an economy that's been addicted, as we've said, to easy money for 10 years plus, or really decades, very, very accommodative policy, and tighten as much as we have without things going seriously wrong. Maybe the rules of the universe have changed, David, and I'm wrong. But everything I have learned in almost 60 years on this planet tells me that there will be a bill to pay with the piper. It cannot be evaded. And I think it will surprise people when it's presented. So there's two ways. Either the mainstream is right, the long and variable lags are longer and more variable than expected, and sometime next year, the economy really weakens, or I'm right, something else breaks. And I think probably before the end of this year. The last time you and I spoke, I said to expect pain ahead. I'm going to double down on that, David. I've only got a few months left. This is a rare Lobo Tiggre prediction for you. I think before the end of this year, we will see something else break, and then things will get pretty exciting, not just for gold.
I wouldn't be doing my job if I didn't press you on this. What's going to break?
Well, I said I expected to be the unexpected, but given the choices out there, I actually think the commercial real estate is the most likely cause. Like the student loan thing, $1 trillion of student loan, whatever, fine. But they're already, Biden's already talking about a moratorium for 800,000 people. And they're talking about, okay, the interest starts accruing, but there aren't any penalties for like a year or something. I'm not familiar with all the details of it, David, but it's clear that the people in this administration are going to do what they can to blunt the impact of the student loan or repayments having to start. So I think that's less likely to be the pin that bursts the bubble. It could be something else. It could be Taiwan flaring up. It could be the war in Europe flaring up in some way. It could be a very cold winter spiking just energy. Energy alone goes into everything, as you know. So a really bad winter changing the energy equation could upset the apple cart in a big way.
I have to still ask you why you maintain a negative view on the economy by the end of the year when so many Wall Street analysts and economists have changed their stance. They once agreed with you, they no longer do. Let me just give you one example. This is from a Reuters story. Just came out today. So in July 2022, so exactly a year ago, the chief economist of the Bank of America, Michael Gappin, said in a note, he said, a number of forces have coincided to slow economic momentum more rapidly than we previously expected. We now forecast a mild recession in the U.S. economy this year. He was wrong. Now, Fast forward 1 year, his recent note now reads, incoming data has made us reassess our prior view. We revise our outlook in favor of a soft landing where growth falls below trend in 2024, but remains positive throughout. So a lot of people are changing their stance because of incoming data. I'm just going to ask you this question. Why aren't you changing that view?
Let me break it in two. And maybe a harder question would be, what would make me wrong? Like, when would I concede that I'm wrong? Let me come back to that. But to answer your question, why am I sticking by my guns here? As I mentioned before, just based on statistical averages, it's premature. If the average length of time, and it's an average, if the average length of time for long and variable lags is 18 months, it is too soon to say that they're not going to happen, just based on that alone. So there's no reason for me to change my view based on the averages. And then the other thing is that, okay, the labor market appears strong. It is showing some signs of weakening at last, but it appears strong. But that is, of course, one of the most lagging indicators. The leading indicator, or the index of leading indicators, is negative. The yield curve is negative. We've seen all these mass layoffs. Look at earnings. Earnings keep beating. Well, they keep beating because the guidance was so low because the outlook was so negative. And when you see Wall Street reacting to earnings today, it's very rarely to the actual results being reported. It's all about the guidance. And when some major retailer, reports, that their guidance is looking downwards, there's a huge reaction. So, and we could go on and on. The number of real world indicators out there for the economy being in trouble, and not just the global economy. I mean, we've got the Netherlands going into recession today. That was announced. We had Germany go into recession. We have trouble in Asia. What's going on in Japan is just as scary as what's going on in China. Right? I simply don't believe that American exceptionalism would isolate the United States from a global, significant global recession. So there's the number of indicators that are bearish vastly, vastly outnumber the ones that are bullish. And the ones that are bullish, primarily labor, are starting to show signs of weakness. And then you've got credit cards going up and other signs of stress even there. So actually, I think objectively, just looking at the preponderance of data, to quote the Fed, the totality of data, it's bearish. There's no reason at all for me to change my view. Now, what would make me wrong? Okay, let's say long and variable lags, average 18. If it goes as far as 24 months and everything still looks peachy, then I'd probably say, okay, I was wrong. This is too long for this to be a long and variable lag for something that happened 2 years ago. Or if the economy really takes off, if we see robust growth, we see jobs going back up again, we see manufacturing taking off in a big way. Manufacturing isn't as big as it has been in the US, but it's still important. But if we see much more material signs of real sustainable growth in the United States, even before the 24 months are up, then okay, I have to say I was wrong.
I was going to ask you what would make you wrong, but I was going to ask you, before your thesis is proven wrong or even proven correct, what would change your mind before either proof materializes? Anything that would sway you in a more positive view before we see, robust growth and all that?
No, I can't think of it. I mean, the robust growth would be the exception. The base case would be the long and variable lags just never show up. Like, we get a couple years down the road and nothing bad happens. The exception would be, or the game changer before then would be sudden spurt of growth, that's just incompatible with my view. Then I would have to say my view was wrong.
We did promise the audience you would talk about the sectors you like. Let's start with uranium, because you mentioned that earlier. What's your thesis on uranium?
Well, the basic is what we already said. It's the only commodity, and not just industrial, but monetary metals too. It's really the only one that's below cost of production today. The demand case is just getting better every day. You have even the Biden administration pushing for advanced nuclear, pushing billions to develop, not just rhetorically, but pushing for billions of dollars through Congress. It's there's money in the so-called Inflation Reduction Act. I mean, it's Europe. The pivot in Europe is extraordinary. The number of countries there, despite Germany dragging its feet, even Sweden now. Sweden just announced that they want to build 10 new reactors. I mean, this is absolutely an idea whose time has come. And of course, the BRICS countries, they're building them as fast as they can. So the demand has been there. The secondary supply has clearly been removed from the market. The one, our friend Rick Rule likes to say, the one thing he's been looking for has been the restarts in Japan. That's going as fast as they can. My own view has been even more important than that will be the long-term contracts. When the utilities finally sit down with the miners and start signing long-term contracts, and the miners aren't going to sign contracts for less than they can make money mining. So that will force the uranium price up. And this is, again, not inevitable, not just imminent. This is happening now. These contracts are being signed right now. We won't know about the prices until later, but this is happening now, David, and we can see it in the spot price.
What happened with the price, actually? Between March and now, it shot up from $50 a pound to close to 58. Big move in a short amount of time for uranium. Do you have any events?
Yeah, well, I think that's part of what I'm saying. It's just sort of reality seeping in. It's really not it's not market news. I don't think anything has happened in the macro that has changed the case for uranium. I mean, what I've been talking about, like Sweden suddenly saying they want to build 10 new reactors, that's a trend. That alone, I don't think was going to send uranium prices higher. But the entire trend just keeps coming. It's like your drumbeat. It just keeps coming. We keep hearing them more and more. I mean, the Chinese just installed the heart of the first small modular reactor, first commercial, not demonstration project, but like commercial small modular reactor. If that goes as planned, that really blows the lid off of potential demand and where you can build these things, how safely. There are game changers happening right now. So I'm extremely bullish. And as always, David, I always have to say, and I know my fellow uranium bugs hate it when I say this, this all goes out the window if there's another major nuclear accident. Now, these are very unlikely. I actually don't think 3 Mile Island counts as a nuclear accident at all. I mean, something happened, but nobody got hurt. It was a nothing burger. Fukushima was a tsunami. The only real major screw up was the Soviets and the Chernobyl accident. So that's actually a pretty good track record there. These are very rare incidents. But I just bring it up because if you can't, let me put it this way. I bring it up because I think this is the most solid thesis in the commodity space right now, bar none. More solid than oil, more solid than gold, more solid than copper or lithium, anything else. It is the most solid thesis unless there's a major nuclear accident. So if you go there, you have to understand that a major nuclear accident could literally melt down all your stocks. Like they'll crater. It's extremely unlikely, but it's a significant drawdown on capital if that happens. So don't do it unless you're willing to accept that risk. If you are willing to say, okay, that's unlikely, I'm going to bet on this trend, I think it's the most solid trend in the entire commodity space right now.
I mean, that's kind of a it's kind of a big red flag. Unlikely to happen, but I don't know if it's going to happen. I'm not a nuclear physicist. I'm not an engineer. So you're betting on a factor or a factor not materializing when in fact you have no knowledge of whether or not it actually could, right? So
well, you could say, okay, if we count 3 Mile Island and we count Fukushima as nuclear accidents, which I don't, but if we did, we could say we've had 3 in the last 75 years. So it should be another 25 minus Fukushima. So another 15 years before there's another one. You could look at it statistically that way. I think a more realistic way to say would be that Chernobyl was the only real one. So we've got 65 years maybe on average before there should be another one. But we're making up numbers here, David. I think it's more.
But why is an accident significant? I mean, when we deep like oil rigs have had disasters, we don't say let's not buy oil anymore, right?
Well, yeah, you know what? If I don't have the statistics to mind, but I think that more people have been killed by dam failures than nuclear failures, even including Chernobyl. Hydropower, when that goes bad, if a dam goes bad, a big dam goes bad upriver from a major urban area, that's like dropping a nuke on that city, and nuke in a bad way, right? So, we don't panic when there's a crack in some dam somewhere. I mean, we don't move away from hydropower because of that. So there's, I think, an irrational fear out there. This goes to my criticism of your friend, the professor. I'm just not a believer in the efficient market hypothesis. I think markets are tremendously inefficient. They're very emotional. Markets get overbought and oversold all the time. That's exactly why a disciplined contrarian speculator can make money. You can realize the market's just wrong, right? There's a difference between the pricing and the value of something, and there's an opportunity there. So not to beat this one to death, but I just think there's a particular hysteria about nuclear power. And the longer it goes on and we use it safely, I think the less that will be a factor in the future.
What one more question on uranium, we'll move on. What happened post its highs in April 2022? So the price dropped, I'm looking at the chart, dropped from $64 all the way back down to about 58 before slowly climbing up, not at its 2022 highs yet. So was that just a correction from its highs because it ran up too high, or were there, again, more market news?
Yes, I know exactly what you mean. And if you look at it, so instead of what happened after that high, the answer to the question is what made that high? It was the war, right? There was this sort of panic, knee-jerk reaction into the war. And then after sort of nothing happened, Russian uranium wasn't banned, right? It's still not banned, right? We still can import from Kazakhstan and all this stuff. So basically nothing happened. And therefore the spike after the war, the invasion of Ukraine, went away. And if you average out, if you wipe out that spike, if you erase it, you look at a longer term chart, then it makes sense. The trend is actually pretty steady upwards. And so basically, I think, nothing happened. The spike shouldn't have happened. And over time, it was averaged out.
What's something else that you like? I know you can't give specific stock picks here, but to do that, people should check out independentspeculator.com where you can access that. But just give us a general idea of A, the sectors you like, and B, your thought process behind picking stocks.
Okay, so right now, given the vast uncertainty of soft landing, recession, what happens next, I am literally only buying or interested in deploying more cash into uranium speculations at this time. If there's one, a great one that I missed, I'm willing to go there. If I'm completely new to the sector and I don't know it well, I'd probably just start with the larger household names. There are very few, you know who they are. I do think in this particular space, there is a premium to be had for people that can supply the United States, because the United States government itself has become a buyer. We didn't mention this before, but they're building a new uranium stockpile, and the uranium has to be sourced within the US for that. So there's only a handful of miners or would-be miners who can meet those requirements, and that gives them an extra edge in the market. So that's an interesting tip, if you will, without naming any particular stocks. Now, going forward, so you notice I don't even include that other yellow metal, gold, in there. Like right now, as we speak, what's happening now? I am single-minded right now. It's just uranium. Now, this lack of clarity we have, soft landing, recession, what happens next? When does the Fed break something? That doesn't last for long. If I'm right, we'll have clarity on that before the end of the year. And I'm expecting in the months ahead. So if Team Soft Landing's victory puts gold on sale, I would absolutely see that as a buying opportunity, because I do think those long and variable lags will be wrong. Like it's an apparent victory. It will be a false signal. So if gold breaks down below 1900 to 1800, or maybe even lower, at that point, like right now, I don't want to buy because that's a threat in the immediate future. But if that hits, then I think that will be a spectacular opportunity. I would be looking to deploy a lot into the gold space. Now, sadly, I have to say that silver, I would hesitate because it's also got its industrial side. And we have seen over the last year an increasing divergence. And there's a lot of people that are expecting that divergence to close. They think the gold-silver ratio at near historic levels, it's got to go back. I don't think it does. Now, that doesn't mean I'm saying silver has to go down. I'm saying that the gold-silver ratio, if the use case for silver has changed, it does not have to go back to its historic norms. In fact, it shouldn't. If the supply and demand for these two different metals is now different from what it was before, then the balance or the ratio should not be the same. It should find a new gold-silver ratio going forward. So, and I'm not smart enough to tell you what that's going to be, David, and I wouldn't believe anybody who said they were. I'm just going to have to watch it. If I'm right about the recession, if I'm right about the Fed breaking something and the recession coming and becoming undeniable by the end of this year, if gold and silver move together, then I'll feel much better about piling into silver. I'll buy gold first, and then if silver follows, then I'll buy more silver. If not, then I'll wait for the recession to be done and buy silver when I start buying copper and oil and other things.
What are some of the final question? I'll let you go. What are some of the industrial uses of silver today that are dramatically different from industrial uses of silver, let's say in 20, 30 years ago? I'm not talking about, film and Kodak going out of business and all that.
Well, right. So that's gone. Instead, we have solar panels. And this isn't anything new. This isn't a great revelation on my part. There is some fear that the more efficient panels, they use less silver, but still the use of panels writ large is exploding. So if the deployment of solar panels increases tenfold over the next 5 years, and those panels use half as much silver, you're still looking at 5x more silver consumed that way. So I think, that, and I remember as a kid when these first started coming out, I remember going to Radio Shack and how expensive a silver panel was. And this was a brand new thing. And I remember dreaming about being able
Solar panel, you mean?
Yeah. Yeah.
They were selling them at Radio Shack?
Yeah.
Oh, okay.
Radio Shack is gone too. I'm showing my age here beyond the color of my beard, David. What I'm saying though is like this was a thing that only nerds like me who actually had a soldering iron and played with gadgets at their desk at home. And I won't disclose any explosive devices I may or may not have built in my youth, but but I'm just saying, this market didn't exist. What's happening now? It's kind of funny. My big fear, if anything, is that we're going to pave the planet with solar panels in order to save the planet at the rate we're going. But anyway, so, and silver is also, the best conductor. It's better than copper as a conductor. We just don't use it instead of copper because it's more expensive. But for many, many uses, there are a lot of cars and other electronic gadgets where the superiority of silver makes it a very high demand, high use item there. It also has medical uses. So, silver bugs can hate me for my divergent thesis and call me Darth Silver, but I'm actually extremely bullish on silver going forward because I think of it as a win-win metal. If we're right about the debasement of the currencies, long and variable lags, all this stuff eventually be good for monetary metals, I think that's still good for silver. And if at the same time, after the recession, we have all this, green agenda and everything pushing silver demand through the roof, it has the best of both worlds there.
Yeah.
Just real quick, I know we're running out of time, but you asked about other things. I feel just as strongly about oil. I don't want to buy any more oil stocks ahead of this recession, but when it hits, I think I'd probably, gold first, probably oil will be the next thing. If I see, great household names, I don't want to get too distracted, but exploration for oil is just really tricky. There's no Lassonde curve there, if you know what I mean. There's no exploration, there's no success in progress phase. The well hole either hits or it doesn't. So I would go for the household producers probably first and then look for, growth opportunities. But if those go on sale this fall with a recession and fears about the energy sector, I think those are a no-brainer. And then after that, copper, and then after that, lithium, depending on how the auto sector comes out of the recession.
I lied about my last question. You brought up another interesting point. I have to ask you about this. Okay, so thank you for sharing your top sectors with us. Follow Lobo Tiggre at theindependenspeculator.com to learn more. You said that gold, silver, you alluded to the fact that gold and silver are monetary metals, and I have to ask you why. They were monetary metals once upon a time when everyone used silver and gold coins to transact. They were monetary metals once upon a time when we had a gold standard. Neither of these things exist anymore. So why do people still consider this a monetary metal?
Well, a simple answer would just be to amend my statement to say historically these have been monetary metals. Neither is in circulation now. And part of my Darth Silver thesis and what gets me so much hate mail is that I'm saying that there is actually a different use case. So let's say there was a new gold standard implemented in the future, big panic, everything. Nobody trusts paper money anymore. We got to have something physical or Bitcoin. That's not physical either. So let's say there's a new gold standard. Well, I'm not sure that we would see silver or copper either. Remember, we had gold, silver, and copper. We had a trimetallic standard in the United States before. Because you used pennies to make change for silver, you used silver to make change for gold. An ounce of gold was just too much money for most of your day-to-day. You wouldn't go down to this local supermarket with a double eagle to pay for a loaf of bread and a gallon of milk. But in the day of digital tokens, blockchain solves that. So I think that the case can be made. Nobody's going to want to go around with like a medieval gold purse jangling at their belt, right? Nobody's going to want to do that. In today's world, I think gold, if it gets recirculated as money, it stays in the vaults, trusted vaults, BRICS, whatever, whoever you trust. And it's the digital ownership that gets transferred. In that world where I can transfer 1/100,000th of a gram of gold, I don't need silver or copper to make change. So I can see a use case changing in the future. And sorry, just real quick to your Bitcoin fans, I know that you have them in the David Lynn report. I am not hostile to Bitcoin. I have no rational way I can see to fix value with it. And I think it's very dangerous for people to say that an asset that's only existed for less than 15 years has now been proven. It's not like thousands of years of history. It's not like the flash crash of 2020 really put it through the ringer in a rigorous way. I think there are a lot of unanswered questions about Bitcoin. If it's still holding value in 10 years, David, then I might change my tune and I might see it differently. But I see cryptos in general as a market response to government mismanagement of the money supply. I wish them all the luck. In the end, I'm not hostile to any form of money. My view is let the market decide. And if the market decides it wants to use gold and silver, fine. If it decides it wants to use platinum, I think that's silly, but fine. That's the market. If they want to use Bitcoin or Ethereum, whatever, let the market decide.
You mean we shouldn't have a $2 trillion platinum coin? We shouldn't. All right. Well, Lobo, let's end it here. Excellent discussion as always. I appreciate it. I mentioned the independentspeculator.com. Anywhere else we can follow your work?
Just encourage people to sign up for the free newsletter. It's called a Speculator's Digest. And I promise if you do, we will not spam you with a flood of daily ads. You get one email per week. It'll showcase my thinking, my work, and then you can decide whether to hire me as your due diligence guy or not.
Mm-hmm. Excellent. All right. We'll put the links down in the description below. Thank you very much, Lobo, for your time today.
Thank you, David.
Thank you for watching. Don't forget to subscribe.